Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The pipe top formed on the 9th and 12th of September were the direct triggers for the move lower that we've seen since. The actual pattern that's set up for the move lower, the lopsided diamond pattern, seen in the top left of the daily chart and highlighted in dark blue, is huge. I'd given the primary target for this in the 166 3/4 area, whilst the secondary, harder to achieve target X1 was always in the 142.40 area. Now, the primary target was achieved in early November, and the harder to reach secondary target X1 is in the bottom center of my daily chart. I said at the time when I indicated these charts many months ago, and I quote, "Needless to say, given the size of the lopsided diamond pattern, these proposed targets below, assuming the break lower holds, are some longer term targets." End of quote. I also continued, and I again quote, "There is one other fly in the ointment. Perhaps, just perhaps, this lopsided diamond pattern is becoming a big bear channel. If that is to be the case, then the first area to look at below will be the lower bear channel line of such a pattern. That's currently at 164.5, and the end of the quote. The extension of this bear channel you can see highlighted in bright green on my daily chart, and the lower bear channel line has played a significant part in recent actions. Interestingly, more as resistance once it had been broken than anything else, though I believe the core of the resistance was and is the nearby 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, which I have highlighted in purple. Between the extended lower bear channel line and the neckline above as resistances, and for November and December of last year, the support below the 2017 high at 159.30, plus the combination of the lesser Fibonacci lines at 153.60 and the May and June 2021 congestion at 153.30. Well, prices seem to halt their headlong fall and head somewhat sideways. I spoke about this in early December 2022, that perhaps all this drop and sideways action may be turning it into a descending scallop pattern, especially after looking at London coffee, where it seemed a more reasonable idea. Well, I still hold to this idea, and a fall since the start of this year is in line with such a move. Hence, I will lay out some possibilities on the downside for such a pattern. A primary target X would be in the 128.5 zone, whilst a secondary harder to reach target, a much harder to reach target X2, would be way down in the 78.5 zone. Okay, so what is in the way to stop the market reaching down to target X? Well, lots of things. Last week the market punched down through the August 2017 high at 147.25, and then met a close, compact pair of supports that turned prices back up a little by the end of last week. This pair were the September 2018 high at 143.35 and the 2019 high at 142.45. Below these, we have the 2020 high at 136.80 before we can even realistically look at target X in addition. Now, in addition to these, we still have target X1 below in the 142.40, which is interestingly seemingly also adding to the support. However, it will be very interesting to see how far any price rally can extend, as above we have the 2017 high at 159.30 as the first of many resistances. London coffee. There were in the recent past two key relevant features here in relation to the start of the fall in this market back in the summertime. The first was early on. It was the early August until late September type of head and shoulders pattern. The second feature was the late August to mid-October falling wedge pattern. This second pattern gave depth to the fall and saw prices drop in mid-November all the way to the lower time, currently 1703, of the late December 2021 to mid-July 2022 bearish Andrews pitchfork, which I've conveniently highlighted in dark blue on my daily chart. Since then we saw the market curl upwards, though as it has tried to do so, it has shown increasingly indecisive patterns, especially over the 2018 high at 1845 and under the congestion at 1897 until late last week. Thus we come to my commentary from 6 weeks ago when I put forward a new suggestion of what may be happening. You see, looking here and also a little also at the New York contract, I had and have a suspicion that the action since mid-October may be moving towards being a descending scallop pattern, sometimes called a backward letter J pattern. It is still early, even now, but especially here in the London contract. This has, well, in London, this has merit. So if the recent weekly indecision of a weekly key reversal down 3 weeks ago, and now, whilst not quite an immediate countering weekly key reversal up last week, it's nevertheless in the ballpark as a weekly key reversal up, we have seen indecision on an inter-week basis. Even now, I am not yet convinced that the move higher is the way to go, but I'm mindful that it may well be, so here are just the primary targets, both above, just in case. I have the primary target below as well, but that requires a significant move down through the October 2018 high at 1792, and I'll give that when that happens. Okay, so topside, the primary target idea would be in the 2095 area. This is a doable action, but it will require pushing through a lot of resistance from the overhead middle time, currently at 1947, plus separate congestion at 1945 to 47, and then more from 1968 all the way up to 2004. At the moment, this looks pretty heavy resistances, and I'm not sure that the market will be able to do so, to reach higher. Finally, I would like to finish by reprising my final point from 9 weeks ago and repeated ever since, and I quote, I'd like to point out two potentially impactful factors that are rapidly approaching the market from below. They are highlighted in pink on my daily chart, and they are the January 2021 to date uptrend, currently at 1755, and the October 2020 to date uptrend, currently at 1746. By the end of December, they will mix with the congestion zone 1740 to 1746 that contains the August 2021 low at 1743, which may make for an interesting time, as the lower time will be down there as well. End of quote. Well, the lower time is now below both uptrends, and this coincidence of trend lines, I am sure, caused the weekly key reversal up we saw late last week.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.